Check, please.
Welcome back to Everything Money. In this video, we're talking about Palantir. This is a data-driven software and consulting company. They have helped military organizations, private corporations, and even individuals get out of sticky situations by utilizing and analyzing data. They help with hacks, leaks, and gathering data so that companies can use this data better. This company IPO'd very high in the fall of 2020, and it has since crashed. Kathy Woods, Paul, has completely gotten rid of her entire stake in Palantir, which was once the best thing ever. I would say that if you'd watched our channel over the past year, Paul has reminded us in every video we've ever made that it's not that he doesn't like Palantir, you just don't like the valuation, Paul. But since it has collapsed so far, it might be in your wheelhouse. Tell me why.
So I did say this, and remember, I'm a big fan of Peter Thiel. I always say this, company and stock are very different things, guys. Very, very different things. I cannot stress this enough. An investor understands this. If you're not an investor, if you don't understand this, you're a speculator. That's a very easy state. If you don't understand the difference between a company and its stock price, the difference between them, you just don't get it. Now, does that mean you're hopeless? No, because I didn't get it for a long time. I was just like everybody else. And then all of a sudden I said, there's got to be a better way. All right. So Palantir, I remember saying it was around $5. I was interested in it. And now it's down to 11. What's it at?
In terms of saying, we ran the numbers with our stock analyzer tool, and with projections and growth, it gave us a buy range of somewhere between $5 and $12.
So Palantir's been around for a long time, but it hasn't been profitable for a long time. So whenever we make projections about the future, it's hard when there's no profitability, because then you go, well, when they are profitable, how profitable will they be? Does that mean you can't do it? No, every investment is the present value of all future cash flow, or the present value of all future cash flow and negative cash flow, right? So if a company has -1, 1, 0, 1, 2, 3, as time goes on, there's negative numbers in there, but those can still be present value together. So let's go look at Palantir through our software, the 8-pillar software, Palantir. Click on it. Guys, a new thing here on the website, we have updated pricing constantly. It is constantly updating the price. So let's just go right to the 8 pillars here. Not enough data. So let's go start from the very beginning. Well, there isn't anything. Income statement. The revenue here. Now the revenue growth is insane. Look at 2019, 990 million. And now 2021, last year, 1.5 billion. Insane revenue growth. Their number of private commercial accounts is growing like crazy. I was reading about this. They have something like 300. I don't know what the exact numbers are, but the growth is incredible. Now, here's the issue we have. The net income last year was still a loss of 520 million. So let's split it up by quarters and see if there's any promise in the quarter numbers. So just to show you guys, last quarter, 432 million. The same quarter of 2020, 322 million. The same quarter of 2019, 230 million. So there's definite growth there. Are they profitable yet? Well, let's scroll down here. No. They lost $156 million last quarter. Now, the good news is they lost 148 the quarter before that. You might sit there and say the same quarter previously. You might sit there and say, wait a second, this is worse. It is, but they had a lot more revenue, so they're probably still growing, things like that. I'm not as concerned about that.
If you have lost money on this company by listening to folks in the news, you could have screened this many months ago using our software and find out what a bad deal it very, very well might have been. Paul, tell them what they could have done about a year ago in avoiding Palantir and getting the software.
So this software is created specifically because the people who watched our channel wanted to be able to analyze stocks on their own. So we very simply created it. Granted, it took hundreds of thousands of dollars and lots of developers, but we created it. What you get is everything here, including 8 pillars portfolio, stock analyzer tool, retirement calculator, exclusive daily content. Every day we release content just for our users. You get access to Seth Moe and I. You get all of this and the watch list and all the data. We were reviewed recently and somebody said the news that we have alone is worth the $30 a month. $1 per day, guys. You can get all of this. But most importantly, our chat community. Our chat community is made up of over 6,000 people who talk every single day about all their investment ideas. Because trust me, it's so difficult to find like-minded people. You found us and you were attracted to us, and I guarantee 95% of your friends would be like, these guys are crazy. And that's fine. But if it makes sense to you, these people agree with you. And they can talk to you. What do you think about this stock? Oh, I don't like this. I like this. It's an engaging community of saving time on research of companies. On all investment ideas. People in there are talking about crypto. I go in there and just sit there and say, hey, this is what I don't like about crypto. And people disagree with me. Fine. It's a great place to engage. All of this is available for only $1 per day. If you can increase your returns by a mere 1 or 2%, or
not lose 70% on Palantir,
or decrease your losses by 1 or 2%, forget about Palantir 70%. That would have saved you a ton. This will lead to hundreds of thousands, if not millions of dollars in your retirement. 2 ways to sign up: everythingmoney.com or patreon.com for our international users. The benefit of everythingmoney.com is we are not big enough to charge sales tax yet, so you'll save that for a while. And the great news is also, as we grow further, new users will pay a higher price. You're locked into the rate you pay today, $1 per day. It's a no-brainer, guys. I can't even tell you how easy this is. Now, for our stock analyzer tool, this is the big thing on our website. This allows you to take all your assumptions in the future and put it in there, and it'll tell you, hey, here's what you should buy the stock for. And the great news is we have a new feature called the watch list. So you can add the stock at a certain price and notify you when it hits that number. So let's put up some assumptions in here, because really with Palantir, that's the way to go. The problem is going to happen if there are future losses. This will not calculate future losses quite well in this current state. So I'm going to assume lower profit numbers and growing as time goes on the positive assumptions. So revenue growth. I'm going to go with 20, 25, and 30%. Let's go 15, 25, and 35%. Now, to give you an idea of what that means, at 35% revenue growth in the next 10 years, when they did $1.5 billion, that's $30 billion in revenue 10 years from now. The question you have to ask yourself is that realistic? Is that a possibility? Is that a realistic possibility? Mo, what'd you just say?
Who knows?
Who knows?
I have no idea.
Part of your research will be to sit there and say, okay, is their market size, can they sell $30 billion worth in year 10 from now as they grow? I don't know. Now, 15% revenue growth in the next 10 years times 1.5 billion, it's $6 billion. Okay, that seems pretty reasonable. I don't know either.
Yeah, but even then, it's like, I don't know. Sounds
right.
Good.
And that's what every investment is. And the more track record you have, the easier it is to give some sort of assumption about the future. So that's why I've been anti-Palantir as it was $40 a share. I'm like, listen, that's assuming so many positives have to happen. Now, as it's $11, okay, maybe. So let me put some assumptions in here for profit margin. I'm going to go with, now I'm going to put 4% in here. That's way too low for a software business, but it's also going to factor in losses along the way. So maybe the first 3 or 4 years are going to have negative 10% loss, but the last 10 years are going to be a positive 15 or 20% gain. Profit margin. I'm going to go 7, and I'll go 8 and 12%. Free cash flow, I'm going to do the exact same thing. PE, 13, 15, 17, just because I like doing that. And then for, of course, the return. Guys, I actually might go higher. I might, because of how risky this company is, I need more margin of safety. I'm going to go 15% return. I usually do 12.5%. We've done 1,300 videos. I've done 12.5% in 1,299 of them.
Yes.
In a lot of them. I'm hit the analyze button. Okay. So I'm still getting 70 cents on the low side.
Nice.
$10 on the high side. So it's close to the high assumption. So in my personal opinion, I had said $5 per share back in the day off the cuff. It might actually end up being around the $3, $4, $5 range. Because remember, they're also issuing shares and diluting you, which is giving you less ownership of the company as time goes on. Now, from a perspective of a balance sheet, which is always something you want to look at when it comes to startups, they have $2.86 billion in cash and cash equivalents.
Well, is that the problem, Paul? This isn't a startup. This is a 20-year-old.
True. I meant your very good point. Very good point. It's a startup in the sense of the revenue path is still in its early stages and growing rapidly. Okay. Now they have $2.86 billion in cash and cash equivalents and only $1 billion in total liabilities. So for a company that is currently at $22 billion, you're essentially paying $1 billion less. But even for a software business, guys, the price to sales ratio is very high. It's 14 times sales. But again, they're growing like crazy, so you can justify a higher premium. The question is, what premium? The issue I have had with a lot of investors in Palantir is they think, it's going to grow 20, 30% a year, pay whatever. They're not saying pay whatever, but their actions are dictating that. I'm sitting there saying, wait a second, just pump the brakes. I have a lot of potential in my future, more than Warren Buffett does. Warren Buffett's 91 years old. Why is he worth a lot more than me? Because he's earned it. He's got the cash in there. He's got the cash flow, all these things that justify it. I have not, even though I have way more potential than Warren Buffett. Way more potential. A-Rod retired from baseball, right? Are we going to give some 15-year-old kid who has potential in baseball his money versus A-Rod coming out of retirement? No, you give A-Rod more money. Why? He's proven himself. All these analogies in life are there for that taking. We just got to remember that price is what you pay, value is what you get.
I am now learning why you were so dismissive of this company at the previous pricing, the market cap.
It was almost $100 billion market cap for what? For $1 billion in revenue at the time. It just didn't make sense to me. It's 80 times revenue. Even with growth potential, you have a lot of growth to make up for in order to justify any remote iota of that price.
Yeah, I was watching this old clip, this old man talking. He's kind of out of touch, but it was a speech he was giving where it almost takes him about 30 seconds to look at a deal and sort of know if he's interested.
30 seconds? Why so long?
Yeah, it was this guy named Jimmy Buffett.
Jimmy Buffett?
Warren Buffett. But anyway.
Is that what he said?
Yeah. I mean, 30 seconds, sometimes 30 seconds. And so
it's so funny to me when people criticize. I remember going through houses. I remember once I was buying a deal. This is a real estate deal. But guys, every investment's the same to me. If you understand them, you can tell very quickly. I was buying 6 houses from this guy who bragged about how he spent so many years, he said so many months researching these properties, and I was buying them from him for 25% less than he paid for them. We go through a house, 4 minutes later, I'm like, okay, I'm done. He's like, that's it? I'm like, yeah, I'm done. It's like, don't you want to do it? No. And I literally said to him, he goes, don't you want to do it? You spent how much time researching these? And I'm buying them for 25% less. I'm good. Let's move on. And those things have killed it for us. You know what properties they are? Tappa.
I'm starting to take this into account in my personal life. So when I look at deals, I've even told people I need this. There's an ask. Last night I was buying something and they wanted $6,000. I said I need to easily see $9,000 in material here before I'm going to buy this, and that didn't fall very well on him.
Because people want to feel. It's just like the whole old adage about working hard. I always tell kids, walk from here to the door. Nobody should walk in zigzags. Why? Even though it's more work, it's not efficient. If you know what you're talking about, you should be able to tell very quickly. You give me a profit and loss statement, balance sheet, cash flow statement, and give me these, and I can give you a rough estimate. Give me the 8 pillars data. I can give you a rough estimate of what I'm trying to do. So anyways, going to the stock analyzer tool. Now I have my price. I can add to my watch list and add a notification. When it hits $5 and goes below there, notify me. There you go. It's on my watch list now. All this with the software.
Before we get to Paul's final take on Palantir and what he's doing with this, Mo, what are people doing in the bid and ask nation in trading this stock?
So I wouldn't do anything along with this stock just because I'm not comfortable doing that. I would rather go more day to day with this. And if this thing drops below $9, there's no support down there because this company came public when?
September 2020?
Yeah. So this is all the chart we have. So anything below this going to zero, there's no support in there. And that's why I don't like companies that don't have a ton of history going on. But let's see. So let me zoom in here. There's a little tiny gap that I would love to see filled. And those of you that love swing trading, you could take advantage of this. There's a little gap that needs to fill right here.
At what price?
14.
Oh, wow.
Yeah.
That's 30% upside from today.
1364.
Okay, so 20% upside from today.
So if you can get some volume coming in here, get the stochastic to turn up, and just push right through this little 25-day moving average, you have some pretty good potential on a swing trade here. So I would add this to a watch list. Now, from a day trading side, this is an interesting stock because it's not something that you can day trade every single day. But when you can day trade it, you guys both know you can make some serious money on it going long and short. So I would just put this on a watch list. When you'll more often than not lately, you're going to drop below 20%. You're going to go short on this thing. There's going to be days where you could see plus 15% on Palantir. Take advantage of those and day trade it with us in the Bid and Ask Nation on our live streams.
Paul, where am I going in the future with this company? I'm interested.
I'm just being patient. Either their fundamentals get better and justify a higher price, or the fundamentals stay the same and the fundamentals get better and the price goes lower and it still justifies that price. This is a fast-growing company. It could switch very quickly. In a year from now, they double their revenue, double their profit, higher than expectations. It might be a buy at $11. But right now, it is not a buy for me at $11.
Extreme patience. I need more of that in my life, and I'm learning.
Yeah, we all do.
Yeah. fondle the thumbs up, subscribe, see more of our videos, and thanks for watching. See you next video.